With 2023 well underway, I wanted to split my portfolio half and half into what 3 stocks I believe will do the best in 2023 and the other 3 that I think will remain stagnant. Overall, I'm still positive on all the positions that I own in my portfolio, but today I thought it would be fun to break it in half and kind of go through which positions I think will do the best. The first position is Microsoft. Microsoft has had a rough year. It's down nearly 11% in the last year, but has had a recent run up. I believe it's around 14% in the last month. The stock fell all the way down to under the 220s, and with an amazing company that it is, it was almost in the 300s, over 300s a year ago. Microsoft has recently released its earnings, and they even had the recent OpenAI and ChatGPT saga going on with Google. Everyone saw how the Google earnings and report went, with them losing over 160 billion after their misfunction with their new BART system. But the one I believe is set to gain from all this is actually Microsoft. Microsoft currently owns a small share in the search space with Bing, but Google is the main one. They own around 93% of the market share. Microsoft implementing this and making a $10 billion investment is huge, because they really have nothing to lose. They gain a bit more market share in a really profitable area such as search. It's great for the business. If they don't, they can still steady on with all their other ventures. Microsoft, I believe, has been extremely hardly hit, especially when you look at it now. It's risen back up. When it was around that 220, I know this is a position that I was trying to buy into and kind of dollar cost average into. Going through other positions as well, I believe another company that will do very well this upcoming year is Costco. I've been a Costco shareholder for a little while now, and you can kind of look at its 3-year chart. It had a massive run up of around 50% in 1 year, and then since then it's kind of traded steady. But Costco is just a great company with an amazing business model. It's simply just not going to go anywhere. They don't rely on a single product. Whatever's hot or whatever's needed, they will simply just bring it in, and that's what they will wholesale. It was actually a really interesting article put on about Costco and kind of about the demographic that's shopping there, and kind of more young shoppers and more membership. I mean, you look at their earnings and more people are getting memberships, more and more people are returning their memberships year after year after year, and just their entire business model is really good to look at. They take a loss on certain things just so they can get more people in the door. And when you go to Costco, you don't go there to buy a few things, you go there to buy a lot. You go there to buy bulk. And kind of going through Costco in terms of from a shareholder's perspective, it's just a brilliant company. I mean, especially when you're looking for a bit of diversification in your portfolio. I know with mine, when I was really heavily tech focused, Costco's a position that I've been trying to just buy incremental bits and buy more and more. And yes, people believe it might be a bit, you look at the PE ratio, it's very high, but there's a reason it's high. People really believe in it, and it is another great way of diversifying your portfolio. You look at the success it's seen in the last 3 years, up 61%. You can't really ask for too much more with this type of company. Overall, the third position I believe will do really well is actually Amazon. Amazon's a very small position in my portfolio. It's not one that I've majorly invested in, but it is one that I've been looking at recently. And you kind of look at the charts. I remember, when it was trading really high, this is pre-stock split, and you can see the kind of drawback it's had. Amazon is starting to cut back on certain expenses in certain parts of the business that aren't as profitable. They're kind of changing it around a bit, and there was this article that I did read, and it was just around kind of earnings and the outlook for Amazon, and you can kind of see the company's revenue is an absolute joke. 514 billion last year. You read this: Amazon generated annual sales greater than the market cap of all but 8 members of the S&P 500. The numbers they do are absurd in terms of money, and you can kind of see majority younger people. Everyone is shopping online, going through Amazon. You can get great deals, you can get it delivered to you same day. It's just what everyone wants. From the tech space, AWS, huge. Andy Jassy was actually talking about it, and in their conference call, as much as 95% of information technology spending remains on the premises instead of on the cloud. But he suggested that the equation is going to shift and flip. But it's such a good business model with Amazon, and they can continue to just grow, generate more profits. And they did take a bit of a loss with the stock around Rivian, EV car company. They own a massive share of that. They pretty much own it all. And that did take a big player in Amazon's reportings and their earnings. But I believe the stock will bounce back in the upcoming year. Again, it's not a big position of mine. I might add to it, but it's just something I bought when I had a bit of extra cash laying over through dividends and just small investments. In terms of my portfolio, what positions I think will do more kind of average. The first one is Google. Everyone saw the big debacle with Google, where they lost a massive amount of market share, 160 billion, with the answer being incorrect on its advertisement. And it's just little things like that that have really been affecting Google, because these are just little errors. And you kind of look at the stock last year, down 30%. You look at the 3 years, only up 24%. It had a massive run up, but since then it's just really pulled back. Search is arguably the best business to be in, so profitable, and Google own, like I said, over 90% of the market share. They do need to keep adapting, because realistically they're the ones with everything to lose when you own all the market share. Microsoft, anyone else who's going to it, doesn't have anything to lose. Companies will start, like, they pay Apple to be the main provider, search provider on the iPhone, so the more that happens, the more they'll probably have to pay. They pay a big chunk of their money towards that type of stuff. But yeah, it could have a massive bounce back this year. Since how far it's dropped down, it does have the potential to run back up. But in terms of my portfolio, it's probably not something that I'm looking at adding too much right now. Another one was JPMorgan. This is completely different to the Google situation. I think this stock is actually a really good one, but the thing is, it's already pulled up, and this isn't really a growth story or anything. This is just a strong, stable financial company that I think will benefit with interest rates, mortgages, things like that. I think the bank will be strong, generate good revenues, and yeah, it pays a good dividend. That's why I have it. A bit of diversification as well. But kind of looking at it over the year, I do remember when it fell under that 120 mark, and I thought it was a really good buy. And now it's gone all the way back up, but I don't think it's going to have a big growth in the upcoming year. I think it'll be a strong, stable stock, but again, you kind of look through their reports a little bit. They do speak on, I believe it's down here, they're still opening branches in general, and they are hiring bankers, and they're kind of adjusting a little bit, which is what every business has to do this time of the year, and this time in general, because you see how inflation is affecting consumers, especially a bank. Mortgage payments go higher. People are just trying to sort out their finances, and I think JPMorgan will have a solid year, but I don't think it will have the growth of something like a Microsoft. The last one is actually a bit of it's been the strong one of my portfolio for since I started this portfolio, and that's Apple. Apple did have a little bit of a disappointing earnings. You kind of look through it, they did drop in revenue, and I did a video on this covering like where they fell off and where things kind of went well, where things went bad, but in general, just a bit of a miss on revenue, profits and sales. But this is what you kind of expect. I mean, yeah, you look at the earnings per share. I think it was the only one that was really up was iPads. But in terms of the major players, they were down. It's such a strong company though, where like they have so much cash that they can pay off all their debt if necessary. They're not going anywhere. So it's the same thing with JPMorgan. I think the stock will have a strong-ish year, but I don't see it having the growth that potentially other positions have. It's not something I'm looking at selling or getting rid of or anything like that, but it's just not something that at the 150 range I'm probably looking at adding to. Overall, just to kind of sum it up, in terms of the positions, I think Apple will have a reasonable strong year, steady year. I think Amazon has the opportunity to rise back up, especially falling so low. Costco is a position I think can have a very good, strong year with people going to shop there, hoping to get deals. It's just a very strong, good business model. Google, something I'm not too high on. I think, obviously, with it falling so low, it can still have the upside, but that's to be seen. JPMorgan, same thing, I think. Same as Apple. Strong company, not going anywhere, but I don't see any big growth in the stock for an investor. Microsoft is where I see really good potential. I think, yeah, the earnings was a bit up and down, but in terms of where they're going in their direction, I think as an investor, I'm more than happy. And yeah, if I was buying it at a higher price, I'm more than happy to buy now, even after the recent run up. But yeah, just kind of splitting my positions in half. Those were 3 stocks I believe will do the best in 2023 in my portfolio, and 3 that I think will kind of, you could say, do the worst, but I still believe in these positions. So yeah, leave your thoughts on what stocks you think out of these will do the best, and which ones you think how they will trade. For more portfolio updates, I normally do monthly ones. I do have a second portfolio. This is just my US portfolio. Subscribe and leave any comments or thoughts on how your portfolio has been as well. Cheers.